then the latter half is literally a list of 200 tax deductions that anybody with a business or a side hustle can implement into their business today. So it's an A to Z list of over 200 tax deductions. So if you ever got that question that, hey man, can I write off my computer? It's a section that says computer, and it's an explanation of how to write off a computer. Like, hey, can I write off a car? It's an automobile section of how to write off automobiles in both ways. So I'm not only giving you a list, under each item, I'm giving you the definition and explanation how to do it.
To that point, I think you've got some concrete examples. I think some people will struggle with the intangible, but you also talk about some other things that are tax deductible. I don't think people talk about, and honestly, I'm gonna have to get offline with you about this business coach one because I got two. But you talk about mentors, business coach. Can you kind of break this down? So you say, for the people at home, here are the best ways to invest in yourself. These are also tax deductible: mentors, business coach, online courses, books, and conferences. Can you walk through that a little bit? Because I think that'll be surprising to some folks.
Yeah, and I'm probably going to irritate some people when I say this. So here's what it was for me. Like, we're taught to go to college, right? We're told to go to college to get a degree, and we should. I did. I got my master's degree in 5 years. My college education was $150,000. Thank God it was all paid for me. But college costs are not tax deductible. Like, yes, you can deduct your student loan interest, and yes, you might get a small deduction for tuition if your parents don't make any money, basically. But we're taught to get an education, and they won't give us a tax deduction for it. And we have to learn from people who haven't done what we want to do in the first place, right? So, and that's the point I might irritate some people. But you mean to tell me that I can go to a Tony Robbins event, who was a multi-billionaire, and learn business strategies directly from a billionaire who I want to be, and the IRS will allow me to deduct that on my taxes? Because the IRS code says, if you pay for education that helps either you expand your industry knowledge or expand your business knowledge, those expenses are 100% tax deductible. So in that regard, business coaches are 100% tax deductible. Mentors are 100% tax deductible. Conferences, Tony Robbins has a business mastery event. It's like $5 or $10K or whatever, but you can go learn from Tony Robbins and get a $5,000 to $10,000 tax deduction for learning, which is gonna make you more money in the future. So that mentorship that I just paid $35K for, number one, Marcus, yes, I'm getting a $35,000 tax deduction for joining that mentorship. Second, and probably more importantly, I'm gonna make more money because the most valuable investment you can ever make is that investment in yourself. So I want to encourage people who aren't doing that yet to start. And it don't gotta be $35K. It can be $35. Just pay to get in the room. And I'll give you some advice. The more expensive the room is, the more valuable it tends to be, and the more valuable people that tend to be in that room. So that is what I learned in my journey so far, and I'm looking forward to continuing to invest. Yeah. Okay. So for this strategy specifically, so for those of you all that can't see the tweet, it's a generational wealth play. It's a way to pay your kids and have them kids receive that money from you tax free, and then have your kids then go and invest that money tax free, right? And what the tweet says is basically, if you do this with your kids as 8 years old, by the time they're 22, your kids will have accumulated a little less than $500,000 in tax-free money. Therefore, you don't have to pay their bills anymore, right? So the premise behind this tweet is, for this example, you need to have a business, right? Because this example, I'm telling people, hey, if you have a business, you're allowed to pay your children from your business. If your children are doing actual work in your business. And what I mean by actual work, they could be shredding paper, they could be handling your social media, they can be answering phones, they can be cleaning the office or whatever. As long as your kids are doing legitimate work, you can pay your kids up to $12,500 each child. And then that money goes to them tax-free, and you, the business owner, get a tax deduction for that as well, right? So it's a twin benefit. You get a tax deduction and your kids get the money. Here's the thing that people get hung up on, like, well, I don't want to give my kids that money. You don't have to actually let the kids spend the money. Put it into their account and you do whatever you want with it. You can pay their tuition with it. You can take them to Disney World. My only point of this is stop giving kids or paying for things for your children with after-tax money when you can pay it with pre-tax money. And then the last point of it is if you put 6,000 of that in a Roth IRA, and the reason why you have to have a business is because your kids have to have earn income to contribute to Roth IRA. So therefore, if you're the employer that's employing them, they have earned income, they're able to put $6,000 a year into a Roth. And I think we did this at like a 13% interest rate, like something, whatever Vanguard's total index was returning. We put that in there. So they did it from 8 to 22, they have about 400K. And I was the point of this tweet was to get people's mind wrapped around, like, let's set our kids up for the future instead of like putting, phone bills in our kids' name and messing up their credit, like, which is mostly what our people tend to do.
I want to hit another why tweet. So for those of you on the podcast, I'll read this one. I know I didn't read the last one, but hey, you could have been here watching the video live. If you save $400 a month for 30 years, you'll have $144,000. I've seen different mixtures of this. And for people who want to try this at home, you can go to investor.gov. They have a great compound interest calculator. You can type in your non-savings account. I have a quote. I'm holding up my quote fingers. High yield savings account. I think it's like 0.999. It might be 0.09 at this point. I don't even look at it no more. However, if you invest $400 a month for 30 years, you'll have 1.1 million. Less than 1, you can't save your way to wealth. Less than 2, if you use a Roth IRA, this is $1.1 million tax free. You have any thoughts or anything you want to expand on that tweet?
Yeah, man, this is just like a generational curse I'm trying to lift, man. Like, at least for me, right? I was born in a household that said, if you're going to save your money, put it under a couch, put it under the mattress, put it in the shoebox. Don't trust these banks, whatever. Don't invest. You can't trust the people with your money, right? That was what I was, raised under. And it wasn't any of my family trying to be like, negligent or disruptive to my future. They just didn't know any better, right? So I want to debunk the myth of, I want to teach people the importance, not even the importance, the mandatoriness of investing, right? The mandatoriness of investing. So I found these numbers, I researched these numbers, and I was like, these numbers are going to catch eyes. Like, okay, one scenario I had 150K, another scenario I had 1.1 million. What is the difference? Like, we did the same thing. What is this $900,000 difference? And that difference is compound interest. And people are like, what is compound interest? I say, come on, son, sit down. Let me teach you a lesson, right? Because this is what Wall Street and Warren Buffett, at least, I'm a fan of, is trying to teach us, like, investing is not an option, it's a must, right? So you could be doing, two people could have the same amount of money, but one person invests it, one person saves it, and the other one is financially free and the other person isn't. And just because the only difference is one person had a little bit more information than the other person. So I'm trying to lift the curse that I was brought up with an eye-catching tweet like that. And that one, it blows up every time. Like I post it maybe once a quarter, and it hits the, I get so many hundreds of questions, and then I send them to like a little resource to like learn more about investing. But the point is just, you can't save your way to wealth. You got to invest. Period. You don't have a procrastination problem. You have a purpose problem, right? So that is, I think, what most people misinterpret. Like, oh, I'm lazy. I don't feel like doing this. You're not lazy. You don't want to do it. So your body is finding ways to get you to do something else. If you love to do it, like you said, they can't pay you to sleep in on a Saturday. So I just want everybody to know that's possible for them too.